Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 24th of January. All right, so as we come into Thursday's trading in the Asian session, once again, coming back to your main charts to see what's been happening, where the currencies are, if any trend lines have been broken. So the Aussie, I mean, I know it's just drifting lower, but to me, that's just sideways. And that's, the US dollar has actually gone back to, well, it's just sort of drifted lower on the US dollar index, and that's primarily because of sterling, right? Sterling has shot up through 129 to the 70, pretty choppy price action there as it went through that trend line, and also just popped up to 130.03, then back down to sort of the high 60s. That's probably enough to sort of screw a few people up, but overall, it's still moving to the top side. And you'll see my overall snapshot of the major currency outlook. Sterling is the one pair that technically across the board is going up. Now, the Kiwi, stronger CPI numbers yesterday, saw a little pop up to the top side. It just got through resistance, but it wasn't until probably sterling started to take off that it went with it. And that's more on the back of the US dollar just being pushed down because of sterling rallying. That also was the sort of catalyst for euro to sort of sneak back up towards 114, the figure as well. Now, we've got the ECB later today, so euro to me has gone into a completely sideways action, lacking momentum. It's a good thing to have when you come into the ECB, because if there's any changes from the ECB, which the data's been quite, neutral to negative, if they sort of signal that there's a delay in any of their plans, well, we should see euro lower. In fact, whatever they say, it's not going to be hugely great. So really selling on rallies, ideally up towards 115 would be great, but I can't see it getting back to there. Dollar yen popped to the top side, nothing out of the BOJ. Looks like a few punters were getting excited with no change from the BOJ, but I can't really see that sort of happening. And as you see, the dollar started to drift lower across the board. And that's, as I said, once again, with sterling rallying and pushing that dollar index down. So don't think for a second this is US dollar weakness. Okay, it's not. When we come over, and I'll show you the equity markets at the moment, the market is moving with the equity markets because we don't have US fundamental data. Equity markets slightly up. So that means, sort of just generally risk on, even though it's only like a fraction. That supports the Kiwi move to the top side. Funnily enough, the Aussie hasn't done anything, but the US dollar sort of drifted lower on that. Now, the dollar CAD was one of the feature currencies from yesterday with the retail sales figures coming out. I drew some Fibonacci's here on the chart just to sort of give you a look, because to me, there was no major trend lines around. But, the currency sitting around 133, sort of 10.15 at the time of the retail sales release. The data came out weaker as we expected. It shot up to the top side. Now, it's maybe just a coincidence it stopped at the 38.2% or Fibonacci, where, I went through it, but it was sort of offering some sort of resistance. But that is now factored into the market. That's why the currency is just trading neutral. But I'll come in and just explain that in a second. But that's the only move we've got. And it wasn't massive, but there was a little bit of cash in it. I'll come back and explain that at the very end, the move, the execution and everything else on dollar CAD, but that's the reason for the move higher. So when you come back to, when you are looking at these major currencies, right, so before I switch over to the news, so you got the Aussie sort of stalled, sideways trading in euro, even though it's slowly drifted above that resistance. As I said, sterling, top side. Now, sterling's moving to the top side on a potential Brexit delay, right? The market is starting to think everything negative is factored into sterling. So everything from here could only be positive, and that's sort of seeing sterling rally. As I said, last week, even probably more than that, a move in sterling back to 135 will happen very quickly and is still on the cards. Dollar yen sideways to me, it's got a slight upward momentum, but it does have the ability to really stall and just trade sideways. And Kiwi, well, it's looking it's back in the limelight and looking for higher levels. So I want to see how that goes. Now, oil, dollar CAD, well, oil's back at $52. The CAD fundamentals are starting to come in weak. Manufacturing sales weak, retail sales weak. The market is going to start factoring in weaker GDP numbers, and that could see dollar CAD back above 134. But no real technical setup here except for these Fibonacci. So it's a bit of a tough trade on that front. Now, so you see those currencies, they're sort of just drifting. Everything's sort of just drifting a little bit. There's a few fundamentals impacting. Sterling, the main catalyst. And you come back over here to the news, and this is sort of indicative of what's sort of been floating around. Now, we don't have any US fundamentals going around at the moment. So when you look at the news, it's all rubbish. Okay, they're printing stuff that is just hearsay or rumours, right? It's nothing tangible. So it tells me that the news services, you know, with no US numbers, nothing out of the Fed, nothing out of the central banks, they are desperate for some sort of news to get things moving. Outside of that, they'll start writing crap, and that's exactly what's happening. If anything, the CAD stuff is a little bit more relevant around the weaker data recently, and that leads into that sort of potential weaker GDP figures coming forward. Now, coming back to the main sort of markets now, obviously the no US numbers. The market is focusing on the particularly the US equities. They drive the global equity markets generally, right? So they're slightly up. The Nasdaq up 0.1, the S&P up 0.2, and the Dow Jones up 0.7. So to me, that's almost flat. It's not enough to really get things moving. And sterling was the main catalyst. If you look at the dollar index, I mean, it has just drifted down through this short-term hourly support line around 96.20 or just under that. It hasn't really gone far. So this is one of those situations where don't get caught up and think, well, the dollar's going down. It's actually really trading sideways over the big picture. I mean, even on the hourlies, it's drifted down through that. You can see how that trend line, the market is focusing on that trend line primarily because of, you can see how it's broken down. It's come back and broken down through the line, come back and retraced, and then sort of just drifting. But you'd expect it to drift sideways from here. I'm not exactly bearish on the dollar. In actual fact, as we wait for those US numbers to come out, or the US government shutdown to finish, I'm thinking the US dollar is just going to drift with the fortunes of sterling and euro, right? The two big components of the US dollar index. So that, to me, the US dollar is going to be neutral from this point on until we get that US government shutdown issue resolved. Now, just looking at the numbers, okay, this is coming back into that CAD sort of situation, the CAD trade. Now, what we were looking for is worse than 0.8, okay? Now, we got minus 0.9. That was going to give us a trade to the top side in dollar CAD, and that's exactly what happened. So when I come back, and let me just sort of run you through that component. Let me just get you back over here. So with the numbers, right, so you've got to add up or collect the data, and this is what you get from looking at the market sort of each day. So going back at the previous day, we had manufacturing sales in Canada are a sort of important number, or very indicative of what's going around. Now, these numbers were weak. Now, dollar CAD at the time wasn't really doing a hell of a lot, okay? But this sets it up. It changes short-term momentum. Let me just come back to the chart here. So you go back 24 hours, and you're looking for potential when those manufacturing sales figures come out. Now, you sort of start to get a bit of a move to the top side. Oil, which has been a big driving factor for the whole move down from sort of 135 to 130, 180, right? That move has been factored in. You can see the green bars there sort of trading sideways and starting to sort of whip around the place. Now, that's oil. It looks like it's found fair value around 52 bucks, and it's having less impact on the dollar CAD or the CAD at this point. So this is where the data comes in. So, but we've got no really support and resistance lines. As I said, we've only got these Fibonacci levels. So when you've got that, it sort of drifts. The market is a little bit, they use Fibonacci's more so to manage positions than instigate fresh ones. So when you look at the following the CAD manufacturing sales, yeah, sure, it's starting to move higher. Sort of just drifts back a bit coming into the CPI. Oh, sorry, the CPI, the retail sales figures. And that's probably just moving around with oil. You can see oil was sort of moving down at this point. Then it was around sort of 10, 15 on the time of the release. The figures, if I just bring you back to those. Actually, let me just come back and I want to give you something else there as well. So if you come back to the figures, I'll just show you that now. What we're looking for, the market was expecting plus 0.6 or minus 0.6. So I got to get my bloody things right, get the pen out of there. Minus 0.6, okay, month on month, came out minus 0.9. And when you look at the actual trade set up on the next best trades, if I just come back down to that, we're looking for worse than minus 0.8, and that gives us the potential trade. Now, it was a buy order at market. At the time, that ended up being at 133.25, right? And that's pretty much it. The rest of your plan comes into play and takes care of the order. Basically, let me just really widen this out so you can see a bit more price action. So looking at the overall trade itself, right? So this is actually, there's no real sort of trend lines to me at this point. So I'm looking to trade at market when the currency is sitting around 133, sort of, 12.15. Now, the execution, straight away, buying when those numbers come out. Now, one of the key questions we've got asked is, how do you know it's going to pull back? Well, the initial, let me just show you the price action. This is indicative of 98% of movement. So the overall trend, right, you've got to understand a couple of different things. Short-term bias is to the top side, but the overall trend in dollar CAD, right, on a big scheme, I mean, of late, since January 8th, it has been sideways, but it has been down, and that's based on because oil was rallying through the roof from $40 to, $50 odd. That really pushed CAD up and dollar CAD down. Now, so that's the overall sentiment. These short-term numbers, they're not big enough to sort of change the overall trend unless they are all weak, but it's enough to give it a short-term sentiment to the top side. Now, where does it stop? Well, if we had a really good support and resistance, it may stop around there. It stalled here just under 70 or around 70 and then started to drift backwards, right? And this is because what it's doing, the short-term data is against the overall trend of what oil is doing to dollar CAD, and that's where it starts to stall. But the initial retracement on the numbers, so you see the first little spike, it's sitting around sort of 15 at the time of the release, goes up to 45, retraces back to 30, so it comes back about 15 points and then starts to move higher. At this point, I would have thought it would have kept on going, but it sort of, hit this Fibonacci or whatever else, and that was enough. It just started to fade. As we saw on the other currency pairs, there's always, you got to look across the board what's happening with the dollar. And with that sterling move to the top side, right, and that took euro with it, the US dollar started drifting lower against everything, basically. So what we had a situation is we had the Canadian data, which supported a move to the top side, but then the dollar itself was weakening against other pairs, and that's where it just started to drift lower, right? So there's all those little variables that you have to consider. Just because dollar CAD's going up doesn't mean that what's happening on the dollar and other pairs doesn't impact. It does, okay? So the dollar starting to impact there, and it gave back its grounds. At this point, I would say that trade is over. I mean, it's just sitting around 40 and could potentially go up or down. So to me, I'm already out of the trade. I had a trailing stop loss on that with 20 points. Once it even got up to 40 points in the cash at 65, my order was raised to 20 points in the cash, and I got kicked out on that sort of move back down. So it's one of those ones, you give yourself a chance to make the cash, and that's pretty much it. So from here, those retail sales figures are now factored into the market, and dollar CAD can drift. Now, what we're talking about on the news, and you connect the numbers, so we've had manufacturing sales, retail sales, both weak. What you're looking for is another follow-up number, a good number, which would be weak, and that would give us the potential big direction. If the next bit of data is weak, we should see a much bigger move in dollar CAD to the top side. It means all the economic numbers are matching up. If the numbers are strong, well, then that just nullifies the recent move, and we sort of drift around in the current range. In the big scheme of things, as I mentioned, the dollar CAD technically isn't really set up like very nice at this point. All we've got is Fibonacci's to work with. So it's not like hugely encouraging to sort of jump in. It was always going to be a short-term trading opportunity. If anything, you've got this resistance line. It's got 2 touches, so it's not like massively important at this stage, coming in around 133.95. So that's what we've got to look forward to on dollar CAD. So hopefully that makes a bit more sense to our traders who were looking at that opportunity. As I said, do you stay long now or get out? Well, it's it's up to yourself. I would have the trade at break even if you were still in it. The sort of one encouraging thing is the, stochastically on the momentum side, dollar CAD is starting to get into an oversold situation. But don't forget, the US dollar is just moving around with the fortunes of the basket. Sterling at the moment up, euro up ahead of the ECB. So the US dollar is a bit of weakness. So it may just drift back down towards 133, sort of 15.20 where it started. All right, so that's dollar CAD, right? So when you come back to like the currencies, you're always looking forward, right? This is about not sort of always over-analysing what's been going on. We've got to sort of work out where it's going to go from here. And that's what trading is all about. Once again, you look at dollar CAD, and this is one of the pictures that you need to understand. In the big scheme of things, to me, short-term, yeah, it's popped up, okay? But that's, not much to go by. US dollar outlook, CAD outlook, still to me pretty much sideways. Dollar CAD on the charts, medium term, long term, it's just sort of drifting sideways now. It's just found fair value. So we don't have that, really positive tone. If the medium term trend was up, I'd be looking to get back into the dollar CAD on this next sort of retracement lower, but it's not. So I'm sort of out of the trade and sort of looking for something else. And just on that, just as we go look forward, sterling is looking like it's looking cranky, really cranky. Short term, yeah, it's popped higher, but medium term and long term charts, like your daily and weekly charts, this thing is going straight up. So the current technicals aren't just sort of mildly going up. This thing is bullish. The UK fundamentals are strong. So that outlook is definitely to the top side. US dollar is now neutral, so it's going to go where sterling is taking it. Of course, Brexit, this geopolitical event that you can't see, can come in and sort of impact. But outside of that, sterling for all money is headed to the top side. So when you come back to have a look at the overall sentiment of the majors, okay, it's all these other currencies don't have consistent short-term or medium-term direction. And that's why they're all trading sort of generally sideways, which means they could go up or down. The sterling has a situation where it is going up, right? There's no, as I said yesterday, above 130, the figure, we could see it sort of really kick in. Well, it's done that. It's got up to 130.70. It's now sort of trading sideways. No one really wants to buy up here because there's no levels, but I can't see it really, I can see it keep going higher from here, even though it's a very hard trade to be getting long up at these levels. Now, with the data, so we've got a bit of an issue with the calendar here. This Aussie employment numbers, they should be sitting here. There's a glitch on the actual calendar. All the details are input correctly, but it's just putting it in the wrong spot. So just be aware, when we're looking for what's in front of us, well, the next potential opportunities, we've obviously got quite a few. The ECB, the main event, we've got some German flash manufacturing numbers. They're coming out as well, but they may be brushed aside unless there's some significant variance as we wait for the ECB. But during that Asian session, the first bit of data, as I said, the Aussie employment numbers should be up here. They will be very important going forward for the Aussie. It's the first major Aussie data for the year. And when you come back and look at the overall charts, you look at the Aussie dollar here, you're thinking, well, this thing is just drifting sideways because it's had no support from any sort of fundamental aspect as in what's going on. It is just trading sideways, desperate for direction. And that's where we might get it from the Aussie employment numbers today. So just keep an eye on that as we go forward. And then from there, the only other thing that we can, or that you can tangibly get your teeth stuck into is the ECB announcement. Now, Euro on these charts, if I just sort of shrink that up, just give you a look at where the Euro fundamentals are. Okay, so you got the high starting up here around 115 sort of 69. Now, this trend line here, to me, is completely irrelevant now. I'll just, what I generally do is, it's sort of, you want to know what's been happening. So I usually just change the color of the damn thing, just so I know where it was. It's slightly above that level. And if I shrink up the data on the downside, you'll see we've got a support trend line coming in down here around 113.30. It's only like 50 odd points away. So it's still in the game, but on the top side here, you can see it just looks a little bit murky. I mean, there's no sort of levels here really. I mean, you're going to have the big round numbers. So 114 the figure, 115 the figure, and then we get into some serious sort of solid resistance up around 115 sort of 25. So what happens with the ECB? I think it could be potentially pretty loose. To me, everything in Europe is still, even though Mario Draghi's been coming out with a nice smile, it's still pretty negative. Okay, and the US dollar has still got a strong economy despite no US fundamentals. So what we're lacking is direction from the US dollar, and that's why this thing's sort of just drifting sideways now. It will come down to the press conference, so just make sure you keep an eye on that. I don't expect any change in interest rates from the ECB, and watch Draghi in the press conference. But to me, I think we could wake up and be down below 113.30. Draghi's not going to want to rock the boat at this stage until Brexit's sorted out, probably. So he may just sort of continue with his general speech, and we may not see too much movement at all. But just be aware the top side is going to be very loose if he does come out with some sort of crazy positive remarks. All right, so that's where we are on the pretty much the upcoming releases, Aussie and Euro, the two key events. And that's all she wrote at this stage. So make sure you are getting squared away with your technical direction. As I said, like when you go through the rest of these pairs, you'll find that they do lack consistent direction across a number of different time frames. We're talking hourly and dailies. There's no connection there with the data. There's no connection with the technicals. They are moving up and down on sort of a little bit on a daily basis, but there's no consistent drive at this point. All right, guys, that's it from me. As I said, just keep an eye on the data. Just be aware of that Aussie numbers here. As I said, they are coming out next in about just under 2 hours. To me, if you're in the Asian session, it's worth having a look at that. Outside of that, get yourself prepared for something out of the ECB. Euro has got generally trading reasonably well, but it does lack momentum. All right, guys, that's it from me. We'll see you in the 247 trade zone. All the very best. Cheerio.